comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Hey guys, thanks for tuning in to another episode of Final Settlement. It was a fun podcast covering all things that have happened the past week and a half in the digital asset space. Positives around Bitcoin adoption along with altcoin mania coming back. Quick word and exciting announcement. You'll be one of the first to hear it. We just launched Onramp Guardian. Really excited to get this out because we've heard from the market all over the board as it comes to security with clients of Onramp and then prospective clients that are looking to leverage our solution, but have certain aspects of giving up what they deem as control as a negative. It's something that I talk to clients a lot about. Have clients have come on from 50 to $250 million and really explaining this notion of it's not all or nothing, but also where we're heading to, you're going to be praying for giving up that control as the market starts to realize you don't want hundreds of millions of dollars or even tens of millions of dollars in your possession. And so what Onramp Guardian does is effectively brings out withdrawal delays, deep fake protection against AI, instant freeze functionality, and then obviously our Lloyd's of London insurance. And then for private clients, it goes even deeper, really thinking through different withdrawal freezes, which has come up a lot, up to 365 days, custom velocity controls around the amount of capital that can move, and then a real proprietary 3FA protocol where you have to leverage the blockchain, specifically the Bitcoin blockchain, to move UTXOs around to prove that it's verifiably you in an objective manner. Really excited about this. If you want to learn more, and if you're already a client, you could just activate it via the web platform. And then if you're looking to learn more, please feel free to book a consultation or shoot me a note. Always happy to hear from folks. Michael at onrampbitcoin.com. Now on to the rest of the show.
All right, boys, we are back. It's another episode of Final Settlement. Today is Monday, September 8th, 9:39 a.m. How are we doing, gentlemen? Michael, Liam?
Good. 112.
112, yeah, we're kind of just, we're sitting in a range. But we got a good show for you today. We got some good links in the pipe. We're gonna start. Mike, this was one of yours. Stripe is launching a stablecoin chain. Seems like this is a trend. There's lots of people that are launching stablecoin chains, and there's a little bit of a counter response from David Marcus that we'll get to, but want to start with this Stripe news. So I'm just pulling up the link now, but go ahead, Mike.
Yeah, so there's a lot baked into this. I think the reason where it initially kind of really caught my attention was because there's a lot of, I don't know if belly aching is the right term, but it probably is across the crypto and digital asset space around what Stripe's doing versus what the existing crypto projects. And it's just a fascinating, I think, taking a step back notion when you think about different proponents of different parts of the digital asset industry will claim certain things around decentralization, what's a security, what's a token, all of these different, and everyone talks their book based on like where they're coming from. And most individuals would understand that, crypto is decentralized in kind of name only. And there's always a throat to choke, including probably with the second largest cryptocurrency, including Ethereum. So point being is everyone came out. So that caught my eye. But the second part was Libra, the notion of Christian Catalini. And then there's a David Marcus quote we'll probably play, who kind of have gone through the full gamut of crypto, digital assets, building a basket of currencies with Libra, formerly at Meta. And I thought that was really interesting because I was actually at the block at the time they broke the news in 2019 when they got the white paper leaked. And it was fascinating because it had the consortium of all the different companies that were in there. And it mirrors very similarly what Tempo has done by you go and get a consortium, and Stripe obviously was its Sequoia ties, which was where Matt Hong came from before Paradigm. And then Stripe, I believe like Shopify's whole business is built on the back of Stripe. So there's a lot of deep connections there. And that's ultimately what you've always needed in any kind of digital asset space. It doesn't matter really about the underlying fundamentals in the short term. If you have distribution, you're going to really be able to exercise some big influence. And so I thought it was just fascinating because Stripe, Paradigm, they're insanely connected. And you can kind of always know when somebody's up to something when people can't stop talking about them. And so the thread, we'll link to it, but it's really great to know kind of the ills of what happened with Libra. Christian outlines, who's a co-founder of Lightspark. But what's fascinating is how it's very similar to Libra and what Tempo's trying to do. But Christian references how, he's obviously talking his book in Bitcoin, and we'll talk about later on the show how, open systems will win. But it's interesting how Christian kind of gives this long thread, but it ultimately is like, yeah, it may work this time because the regulatory climate's different versus 2018 and 19. So I'll pause there because I think that's like the initial start of just like the upcoming TradFi tech wars that I don't think the crypto natives, including the Bitcoin natives, were prepared for.
Yeah, that's an interesting thought on it might work this time because it does feel very much like the 6 or 7 years ago enterprise blockchain consortium deal type structures. It feels all very similar. But that is a valid sort of theory that maybe it is different this time around, and a lot of this stuff gets pushed through with stuff like Genius Act, and also just the general sentiment from this administration being so sort of let it all go, green light on all of this crypto stuff. So yeah, maybe that is a possible path. Liam, did you have thoughts on this one?
Yeah, somebody's going to figure out how to make this work in the short term for sure, and there will be a lot of different winners. But yeah, as we'll get into a little bit later on, it's just built on the wrong foundations here.
Yeah, let's play the David Marcus clip. Let's see if you guys can hear.
Hi everyone,
this.
I come from the future, and I'm here to tell you corp chains are not the way. And I know because I started Libra, and it failed. Most people thought it was killed because it was started at Meta, but that's wrong. It was killed because one corporate-controlled network was about to control global payments at the scale of billions of people globally. You'll tell me times have changed, regulation is clearer now, we're in a different world, but I don't think so. If a centrally controlled corp chain was to control 30 or 40% of inbound and outbound payments to very big countries like Brazil or the European Union or India, do you think the central bankers and the regulators of that country would let an American-controlled corp chain control that? No. They would go after it, and they would be able to kill it because it's centrally controlled. And when one big company creates a corp chain, what do you think rivals will do? They will all create their own corp chain. So we'll have dozens and dozens of corp chains that won't be interoperable with one another, trapping liquidity, creating inefficiencies. This is not the way. It's pretty clear it's going to create a bunch of subscale fragmented networks that are just going to replace the setup of our current financial system and payment networks with new leaders that are going to be the new gatekeepers of a very similar system. And that's kind of not really inspirational to me.
You want me to stop it there?
Yeah, I think he's salty, which is a little sad because you would think you want to win on merit versus it is what it is, but the reality is they're not going to stop it. They're going to allow it and then and govern it in the same way we've been talking about with post 21 and 22. The collapse of these crypto firms ushered in a framework so you can have your fingerprint on everything being built in the space. And so if you're covering that much flow and you have that much oversight and visibility, you're going to be controlled. I mean, we've seen this with 21 and 20 when it came to the tech space and the amount of censoring that happened on different social media platforms, like the the convergence or confluence of like public, private sector. Why would it be any different? Especially in the powers that be know this. There's a reason why they're letting him come in. So there's that. I think
I hear what you're saying, that, you know, he's obviously talking his own book and thinks all this stuff should be built on Bitcoin. And while I would agree with him over the long term, I think what you're getting at is, you know, maybe there isn't necessarily as much pushback in the short term to something like this actually being stood up and used. I mean, I think what he's getting at is like, why would other countries want to use stablecoins that are issued and managed and centralized with US corporates? And so I kind of see what he's getting at there. I think really what he's getting at, though, at sort of a higher level, is really getting at the heart of like this entire Bitcoin versus crypto dynamic, which is like, what do you actually need decentralization for? And it's certainly applicable to creating a new form of money. That's all of the sort of elements that go into Bitcoin's underlying mechanisms, from proof of work to the difficulty adjustment to solving the double spend problem. Like, all of that is very critical in creating a actually decentralized new form of money. If you're just going to like sort of upgrade the financial system, I think this is the question that he's getting at, is like, does that actually need to be decentralized? Like, if you are putting stocks on chain, for example, does that actually need to be fully decentralized? And I think the answer that broader crypto is getting towards is no, because nobody actually cares about these things that are marginal improvements to the existing financial system. Not talking about like the new creation of money, but just like marginally improving trading or these other things. Maybe that just doesn't need to be decentralized, or people don't care enough for it to be. So it's going to be on these corp chains, basically.
That's exactly right. And I think that's why it's important for us to chat about and talk through, because I think part of this show is, and at least in our own framing, and we've gone back and forth for over a year now on like the status of crypto. And I think that was important because those mental models, for better or worse, even though they're annoying, help influence how you build and how you think about commercialization. And the reality is, as we were talking about earlier, when you get into these rooms and it's the difference between a security and a token and a meme coin and a scam, it's just like, you know, everyone's just talking their own book based on what, you know, their own grift is not grifty, but the next. And it's very similar to what you just said, is crypto is all screaming. Let's take David Marcus out of it, but just in general, crypto and whoever's been building on these different layers, they've all screaming now, my token's more decentralized than yours, when they were all not decentralized and all built on faulty premises. So the point is, well, these guys being smart are like, well, why do we even care? Like, there is value in a database that is intertwined, right, with your other payment partners and bypassing the visas and interchange. And then they have the distribution. And so they're just like, screw it. We'll just, you know, go and navigate it this way. And so you have, and I don't know if they're going to claim it's decentralized or not. But I think that's the most fascinating part. And the thing to take away, at least for me, is in the same way we discussed, and I think you're coming around, how we have, you know, years before people recognize it's Bitcoin versus crypto because of the just traditional inertia. It's taking existing Bitcoin people to learn it's Bitcoin, not crypto, because a whole bunch of them are getting scammed with DATs. And like, you would have thought they would have never happened before. How many years will it be for people to recognize that Bitcoin not only has the store value properties, but then also has all of the permissionless properties that you would want, and not in a form of government money that's decreed by law? And it's just going to be a long burn, and people will end up on the other side of it. But in that period, there's going to be a lot of winners, losers, way to commercialize, way to focus, and way to make money. And so I think that's why this is all very fascinating, because the incumbent, or the traditional crypto incumbents, were never going to win this game. This was always my take for years. We've helped set up venture firms in the space, help be in these rooms, and people always get angry. It's like, the best founders have not even heard of Bitcoin yet. And like, well, what do you mean? It's like, they're here, they're like doing it on payments and Lightning and like, you know, rewards. It's like, no, because when you get people from Silicon Valley and Wall Street that are actually have, not everyone, but the people that have execution and operational chops to step in this space, they're going to wipe the floor of all the different companies that exist. And so you see this with like Coinbase and their Amex card. Like, it's the most perfect cohort. It's the kind of area you want to target, not like a stacking sats card that, you know, is targeting a penny pincher that, like, you know, that's just not a demographic from an enterprise value. And similarly, when you think about payments, it was always going to be built around like a traditional player that understood the space and was going to just leapfrog the existing incumbents like a Visa, but also had the distribution. It wasn't going to be built by like, you know, a kid in a hoodie that came in and sold like merchants on you were going to download an app and pay for it. Like these things have been like told for a lot of people native to the space. And so it's here now, and we're going to get to see it play out. And there's going to be obviously on a long time horizon, a lot of this crypto and like stablecoin stuff is all noise, but it doesn't really matter because it's like saying the dollar's noise. It's like, well, it's actually the unit of account for the next, you know, however long. So we better figure out how to like manage it and make money from it and deal with it. So
yeah. Many people don't really realize that there's no token that's needed in order to just send money across borders, and people would rather just use a dollar than anything else, and it doesn't necessarily need to be decentralized. They just want to lower the friction in order to move this across borders, and eventually on a if this gets enough scale, the corp chains become public-private partnerships, and there will be some instances of, you know, censorship of money and transactions, but that doesn't necessarily really apply or matter to these people who are holding it, because not everybody holds a significant amount of capital in just stable coins or dollars in general. And so in the short term, it doesn't really necessarily matter. This will, or maybe it's not this one in particular, but these types of ideas and companies will get a decent amount of traction. And I completely agreed with everything you said.
Yeah, it's all so fascinating. I think like having these conversations multiple times a week really help with the thought process and like discussing, because I went on Rizzo's pod last week and he made a call that he didn't believe we'd see another layer 1 blockchain. And like, frankly, I hope we don't, but I don't.
Wait, what is it? What did he even mean by that?
Like another one pop up, like a Solana. And it reminded me of like Clown World Take or No More Crypto. It's just like, man, the world's insane. Like, how do we know, you know, like to lean? And what made me think of this was if JPMC, BNY, Fidelity, or whoever you call want to set something up, like they'll do it and kill distribution right off the bat. So it's like if they built a new chain or whatever that would mean. The other thing that's fascinating is think about Operation Choke Point and like all the people that have been debanked and still like use the dollar and go get banked. Like imagine somebody having their stablecoin seized or locked. Like people wouldn't flood. They'd be like, you jackass, like why did you say that on Twitter? Like you should be quiet. You know, like the default state for individuals is not like, I'm going to go find a better form of money when my bank account gets closed down. You know, it's like, well, what were you doing? Obviously, you know, this, I'm not being polarized. I'm just trying to take the other side of like all day long is you have to deal with normies. You have to realize like this is the status of the world. And if you want to make money, you have to figure out how to navigate it and be commercial about it. And the reality is like these things are just going to eat a lot of finance and tech.
Yeah, I think that's all right. But to a certain extent, it's going to be all theater to like decentralization theater is going to continue with these things. And maybe a nice transition with respect to that and like sort of just narrowing in on like why these things aren't actually decentralized and why it is theater. This was a story from a few days ago. So World Liberty Financial, Trump's sort of crypto DeFi company, who had previously, I guess, partnered with Justin Sun in some way, locked his World Liberty Fi tokens. We'll click into this, locking 540 million in unlocked tokens and 2.4 billion in locked tokens. They say they believe an exchange has been using their user tokens to sell and push down the price. So basically, they were sort of accusing Justin Sun of offloading some of his position that he had received through his deal or partnership with them. And so they just froze all of his wallet addresses that hold those coins. So basically stopped him from selling by just freezing the account. And you can do this stuff on Ethereum because it's not decentralized. Go ahead, Mike.
Yeah, I think there's an interesting aspect. We'll come back on this one when we talk Solana and DATs, because there's some crazy mechanics happening with locked tokens. But before we go into that, something that I woke up to, and it'll put this on my laundry list of pieces, articles that I need to write, is that there's great lies in every truth, and then there's truths in every lie. And I don't even know if this has ever been said, but it reminded me of like what we're talking about here, because the reason why all this stuff persists is because in the form of the lie, there's truths in that it's on a blockchain because it is on a blockchain, and there's some scarcity because there is some like, relative scarcity they make up. And so people go into these things believing that they're one thing, and but they're all built on, false premises. And then this reminds me of the other side, which is like all the, we don't talk about here. It was like in one of the YouTube comments. It actually doesn't really even matter, but the core versus not's BS. That is all BS. It's actually all positive because it's adversarial thinking. That's what you want in any system. But either way, the conversation around there's truths in every, or there's lies in every truth, meaning like Bitcoin's going to be money on a long enough time horizon. But like the notion of peer-to-peer cash, yeah, sure, it also have peer-to-peer cash, but it doesn't mean that it has to be on the the unit level. And so many people go and use that on the UTXO level. People go and use that for a reason to go build all this stuff. And so I think like if people just understood the different dynamics of both of them, they would get like what's happening, but each one just kind of like hide within the other to like push their own point. And we're still so early, people can hide under all this like kind of like smoke and mirrors, which just goes back to the stablecoin and all the things we were talking about before. Is you'll consistently be able to do this because digital assets, tokenization, or RWAs are all the like lies in the truth. That is this thing that's distributed and decentralized. And then people never got back to the first principle of like, oh, what's happening here? And why does Bitcoin have value? And so they just built everything else from it. And there's a lot of alpha and money to be made though, because like that's the point of these discussions. And what we're doing is, it may seem like short-sighted, but that's like most things in life. You don't really look smart for a while in doing something, but you know what's going on. And then eventually it's like, oh, even the Tempo guys in Stripe, like not Stripe, but there's other firms. Oh, the Kalshi and Polymarket people. While I don't agree and don't necessarily like prediction markets and gambling, those guys have been grinding on that for like 6 years. Like they've like actually been working, So anyway, sorry.
Yeah, no, I mean, it's a very good point in terms of the theater versus actual value created, and the truth that is sort of residual is like kind of what I referred to earlier around like those marginal improvements. Like that's the truth, is like there are slight efficiencies from like a corporate or a B2B perspective for a lot of these things. And so that's the sort of grain of truth that people can sell these much larger promises and visions on. But just, I guess, one other thing on what we have on the screen here, this World Liberty, the other irony here was like, the Trump family, the Trump sons who are involved in this, like, their whole come to Jesus around crypto was themselves being debanked by the US government, and they are effectively debanking someone on their own blockchain or platform. So just some irony there. But perhaps Liam, Liam, do you have anything on that before we switch gears?
The whole thing that everybody's doing with World Liberty Fi token and all of these other tokens that are associated with different stablecoins is the Stripes and the JP Morgans, all the big banks of the world, they're not going to necessarily do that. Because they already have enough cash, they're not going to risk messing up their golden goose in order to make a few $100 million or $1 billion on some random token that's going to be associated with their stablecoin. It's just there's a false premise that everything in crypto has been funded by launching your own token, and that's the only way in order to make a commercial project. That just isn't necessarily going to be applicable to all of these other to all these net new entrants into this space who already have distribution and enough capital in order to drive better payments networks too.
Hey guys, I hope you're enjoying the podcast, and it wasn't too doom and gloom. Really just try to share what's currently happening in the markets, how we see it. The altcoin craze is something that sadly will persist, but I believe if you're listening to this podcast, you probably understand that and think deeply about Bitcoin custody. And just a quick word from Onramp. I'm sure a lot of listeners know of the different offerings that we have, whether it's, multi-institution custody, the ability for our trade desk, lending and inheritance, and then the Dynasty Trust, which we are really excited about. We have no shortage of exciting things coming out this fall. Really, I think industry shaking things across the landscape. We have a lot that we've been working on. The one that I just want to go a little deeper on is Guardian that we announced today, and specifically the proprietary, and I don't even want to call it proprietary, but the 3FA. 3FA, we're really excited about that because ultimately it's something that severs the internet connection from the movement of your Bitcoin. So whether it is, video verification, multiple institutions verifying that, 2FA, logic, time withdrawals, those are all put in place to protect client assets. But at the end of the day, they leverage the internet connection specifically from a subjective view. How do you interact with humans in the logic? 3FA takes that a step further and really relies on public-private key cryptography, specifically around Bitcoin wallets, and the movement of certain UTXOs for a certain client-specific pin. This is something I've been thinking about deeply. It might be overkill for somebody with, call it $1 to $10 million, even though it's still open for them. But for clients that we work with that have tens, if not hundreds of millions of dollars, this is something that I think they're going to be really excited about because ultimately it takes it a step further and leverages either a hardware device that we would ship them or another way that they've generated a private and public key. So if you want to learn more about that, you can look at the blog post or you can feel free to book a consultation. If you want to talk with me directly, again, Michael at onrampbitcoin.com. And hope you enjoy the rest of the show.
Two quick things to call out. One is the World Liberty deal is, I'm pretty confident, is like a complete grift. This is something that with a very senior official and from a government side of like crypto, they were breaking down how like crypto is innovative, whatever. And I was like, it's actually not. And it's like, if you go back, because it was really I felt it viscerally because you tell these stories, but then the market goes into a bear market and there's no volume. And you're like, this stuff has no use. If it didn't have use, like it's just speculation. And so I think a lot of smart people figured out the playbook because there's certain like meme coins and you dump them and then everyone's just like rugs versus where a World Liberty, you go out and you launch the token. I think there's a lending aspect that's supposed to like rival whatever coin Ava or I don't know. But like you see what I'm saying? Like you build a story and a narrative and then they just get super loud about it. So I'm pretty confident that's just like a large grift and there's a playbook. The other quick thing to call out is I do sadly or not, there's going to be a lot of success from I don't want to say incumbents like the Visas, but potentially, but like really that middle stripe, I think of Coinbase. Coinbase is the example, right? Because while we know Coinbase, has its flaws, the reality is this notion of like supporting crypto and something I'm still wrestling with, but the notion of supporting crypto, most of the market can't understand why somebody would be Bitcoin only. And so if you go Bitcoin only, you have to really find a like world-class product and then really like an area of the market that is like not only unaddressed, but like has a TAM that's growing, but also can sustain a business, right? And so point being is like Coinbase built this business and we know they're not the best in class, but they're best in class regarded. And so everyone goes to Coinbase. We know the whole situation of them being blessed. And I think we're going to see that happen with like payments and the incumbents because there's this intersection happening with like stablecoins, native assets being put on chain. And because they support so many things and the reality is they already had the relationships with all the big banking partners, they're going to go there. And so the short order, there's a lack of focus that's obviously going to keep them from winning long-term, but they will like stumble towards success in the same way that Coinbase doesn't focus on Bitcoin, but they have all the Bitcoin, and I don't think that's fully like appreciated. And so when you win and outcompete, you have to play a different game. If you try to play their game, you're probably not going to be able to win. And I thought that's just fascinating because when you look at all of this,
and maybe this is kind of a perfect example of what you're saying. So this was just from this morning, NASDAQ filing to allow tokenization and blockchain listing of stocks. It's like, yeah, the crypto native firm is not going to like get US stocks listed on blockchains. It's going to be NASDAQ who makes the move and does this.
Unless it's Hyperliquid.
Nice transition to what you really wanted to talk about today, Michael. You've been Hyperliquid pilled. Can you give us the investment thesis on Hyperliquid, please?
I definitely haven't been Hyperliquid pilled. I think and somebody that shared with me, I think, listened, so they'll probably get an appreciation. I sat down with at lunch for an hour to talk about Bitcoin, and then I ended up hearing about Hyperliquid because everyone hears about hype and all this stuff. And what was interesting was the guy was I wouldn't look about anything with price, although like it's probably is going to pump. They just, I think this past week, A16Z just, I think there was like yesterday on one of those like well hunters on Twitter, saw like, 1.6 million of the token, like 60 million just went into like A16Z's wallet or whatever. But I mean, before even going into, I'm not at home, so my screen's a little bit different, but I'll pull it up here. So just some quick stats. Hyperliquid, 700 million in total locked value, more protocol revenue than Ethereum and Solana, 5.5 billion in stablecoin sitting in there. I think my understanding of this, it's obviously not like decentralized in name only, but it was, I guess, interesting in the crypto space because the founders didn't take any VC capital. They were, I think, working at a previous crypto exchange before everything fell apart. And the one big innovation, and this is where I find it like the most interesting, is perps, that we all agree like perpetual futures couldn't be present until you had stablecoins because you needed the rolling fund rate and to be able to stream that collateral or deposit and liquidation. And so perps had historically been out of the US, and then they definitely had been away from US equities. And it's my understanding, again, I'm not a trader, but perpetual futures are much better derivative than options for a number of reasons. And so because they're offshore is one thing, but the other thing, my understanding is that their technology, it has like three big things that I thought were interesting. One is it trades spot BTC, which most of these like altcoins indexes weren't. And there has to do with like, again, I'm not technical on this, but there's like a layer between whatever blockchain that they created and then how they receive the assets. So the person that was telling me about this, like, will move their Bitcoin in and out from just like a complete like privacy perspective, just to clean it. So there's the three aspects are the perps and spot trading are like flawless. So it's not automated market makers. Again, I had to do some research on just so you could talk about this because I don't like trade or do any of it. It's just, and I have no Hyperliquid token, by the way. But my understanding is generally on decentralized exchanges, there is limited volume, but also limited spot trading. So they're not very deep in liquid. And that's where you've seen some of this news with different, people showing up and reverting, revolving, getting into Ethereum and like other assets from their spot BTC. And it's deep enough to do that. So the spot trading, the perpetual trading of stocks, I believe, is either on there or planned to be on there. And then the derivatives, the perpetual, there was one other, but the core notion was that they've already found an insane amount of liquidity. And I guess the way that it's constructed is that you can effectively like spin up your own node to validate. So the idea, it's similar to like Bitcoin's. I still believe there's a throat to choke and all this stuff will be shut down on a long time horizon or co-opted. But I thought it was fascinating because they basically figured out the two-sided market problem of when you have a decentralized, quote unquote, decentralized exchange, you have all this fragmentation on all the products. And that's why you go to the centralized exchange. And a lot of volume has effectively moved from Binance and other platforms to this place, Hyperliquid. And if that's all like sounds like BS, well, yesterday it just came out that they put out, I guess there's again 5.5 billion sitting there, and those are sitting in T-bills, right? So somebody's making money on that 5.5 billion. So there's a big bounty to be the stable coin that's native to Hyperliquid. They put out a bounty, and I think it was part of it for marketing. But now everybody's out there trying to talking about it. Paxos, everybody wants to be the native stablecoin issuer for this new token. Or this new chain. And so anyway, I thought it was super fascinating just because it's something that we don't generally talk about. And I think the reason why it's relevant here is if it has any validity to have an actual somewhat decentralized exchange and order book and marketplace, it'll over a long enough time horizon be built around Bitcoin. And so that was like the way I posed it to the individuals, like, well, if this is all right, because it sounds very interesting, this will just all net to Bitcoin, like the fees, the way it's like, managed even on nodes. So yeah.
Yeah, there's a lot there, but there's your Hyperliquid thesis for the day. I think where my mind goes with this, and to be honest, I don't know how it plays out, because the points you make around, even if there is some vector of control and these things aren't truly decentralized, like maybe it's better than the CeFi version, right? And so that's really how Hyperliquid was born. It was born out of people trading perps on Binance most predominantly. And then this was, the more decentralized version of that. You don't have to log on to a centralized exchange. You can just do it from your own wallets, etc. That's where they found a lot of product market fit. But I guess the potential counter to that is, well, what if Coinbase is able to just do this better and provide more liquid perp markets? And so that's something that they've talked about doing for a long time. And I don't know, these are not available in the United States still, but yeah, see, this is a quote tweeting Coinbase International Exchange, leveling up, basically just allowing more leverage. So it was previously capped at 20x leverage. Now you can go up to 50x. I forget what the old limits on Binance were, but I believe it was like 50 to 100 type stuff. And Hyperliquid's like even more than that. You can pretty much do whatever you want on Hyperliquid. So I do think that there's going to be some back and forth between the CeFi and the quote unquote DeFi versions of who's going to win perp futures, basically. And I still kind of think it's an open question, because I do think there is a world in which Coinbase just does this better than Hyperliquid, but I'm not going to profess to be an expert on this stuff.
Yeah. I mean, I think the two aspects, at least in the short order, where Coinbase is kind of like wrecked, is if they go to 50, well, whatever is not regulated will just go to 60 and then 100 and 120. Right. And then when they can't trade public equities, then they will. And then when they can't trade private equities, then they will. So there's always just like, you're trying to be a deeper bucket shop. The other side of it is, it's my understanding that the fees are much lower than Coinbase or any other platform, because the idea is that it's almost like a protocol in the sense that anybody can plug in and use it from a front end or back end. So you can place your own ask and just put your own assets there, and then it's just finding on the other side. So the idea is, in theory, like if there is soundness to this, it should be able to get best execution from the amount of participants plugging in. Especially because it's not necessarily a business per se that has to, justify keeping its revenue. Like, I don't necessarily know how it plays out. My main, I think, takeaway in all of this is that all of these things that find value will ultimately end up in some aspect tied to Bitcoin, because there will be that throat to choke. When the one that comes to mind is the prediction markets, which are another kind of cousin of what's hot right now, and everyone's funding them, and you have these different platforms, but they're all eventually, if they pick up enough steam, are going to come under the eyes of any regulator or any participant to tax them, do whatever, or just like you can only play certain things within the platform to bet on. And you're naturally going to get people further and further on the curve. But then as people get further and further out, it gets sketchier when it comes to what's the token, what are you using, what platform, and what's the ultimate asset to settle on that's censorship resistant, that's unseizable and ends up being BTC. So I think these are just all like kind of precursors on the framework for how it'll end up. I think that's probably why I'm most fascinated with all of this, because it's kind of a glimpse into an actual decentralized future. If you can find product market fit in crypto, well, then you're pretty much going to be able to put it on Bitcoin in some respect, whether it's other layers or it's the native token that's powering it.
Yeah, no, I like that sort of the last part of what you said there. There is an optimistic spin for all of this where week after week we come back and we talk about all of this noise, but like if you want to take a silver lining from it, it goes back to over a decade ago, when basically it was just Bitcoin, and people started thinking about other applications of blockchain technology. Like the thought was always, sure, go test it out, build whatever you want to build, and if it works, if it has product market fit, if it makes sense, then we try to graft it onto Bitcoin in some way, graft it onto that sound foundation. And so I think over a long enough time horizon, that is basically what's going to happen with a lot of this stuff. To your point, is what works, what sticks, will be built on Bitcoin, and we're already seeing that with stablecoins. There's multiple different efforts and angles of bringing stablecoins and even other assets to Bitcoin natively, and so I think it works on a slower timeline, obviously, than all these other blockchain networks, which can move faster, just given sort of the rate of development and consensus required to make any changes to the protocol. So,
yeah, the Hyperliquid stuff is really interesting to me because I've never really traded or done any of that stuff, and so I'm definitely no expert in this, but information tends to be free, and therefore on a long enough time horizon, it makes sense that there will be publicly available order books, just because that just brings more liquidity and ends up being outside of an exchange, as long as the execution is actually right and can have validity and essentially be sure that your assets won't go away, and that there will be no way for somebody to mess up your money, because that's really important. But it does make sense that over a long time horizon, that all of this will be around different, on Bitcoin itself or related to it. Just because I did a little bit of digging on Hyperliquid, and 6 months ago they had these tiny meme coin or whatever that there was somebody who was essentially able to manipulate a very illiquid market, and the Hyperliquid market makers were rolled back the chain and got all the validators together in order to essentially take back the actual capital that was lost by the actual Hyperliquid protocol. And eventually it won't go to, if there is some sort of decentralized type exchange that just will happen over time, because all information tends to be free. It's not going to necessarily be a hype token that is going to accrue all the value. It's going to be either distributed back to everybody who is participating based on the value that they provide in, and the native token in which the capital will go back will be under Bitcoin itself.
Yeah, I hope so. I think that's the medium to long-term play, but I think for a while there's going to be all these other avenues that get more traction, as we were sort of talking about earlier, that the NASDAQs of the world are going to be the ones that tokenize stocks. Like it's logical. All right, switching gears here a little bit. Mike, I think this was yours. We talked about this maybe a week or two ago, but it looks like there's maybe more information on the UAE stacking some Bitcoin. A look into the UAE's $700 million Bitcoin holdings. So what do you have here, Mike?
Yeah, I think one of the chain sleuths, I forget which one. It's titled somewhere in here. Oh yeah, it even says sleuths. Arkham Research. It's kind of interesting. Here's a screenshot for anybody that's listening to the data center in the UAE, I believe in Abu Dhabi. I think most in the industry have known in the Middle East, specifically in the UAE, they've been mining for a while. I think it's been rumored that they've been mining with nuclear energy, and it's been my assumption this is part of the not just the UAE but globally, sovereigns have been mining with facilities in their jurisdiction, but also stacking their own kind of treasury. And this ties into the hash rate being just I think it was 18 months ago, just kind of went completely parabolic and a little bit inorganically. And I think the main reason where I put this in where it's the most interesting is the discussion around SBR and, where do we play out in the cycle and how much longer does it go? And do we go to highs that we're not expecting? And the base case has always been if sovereigns are accumulating, because that's just a different buyer. And we know Bhutan, there was a Russia, and then UAE, and it was just interesting to see they have close to $1 billion. I think that was just look at that chart. It looks like the money printer, right? If you go back, and you kind of see, this is actually how like M2 looks as well, where it's always an interesting chart for me. If you went back to like 71 to 08, it doesn't really look like anything when you look at it in like going back for 30 or looking at it from a 30-year horizon. But if you just look at that mark, you can see it steadily increasing because money was just being inserted into the system. And so similar here, like hash rate was slowly coming in, and then in that 22, it just kind of like has gone completely parabolic, and this is where miners have been suffering, at least in the US and in other places. But yeah, I think that's probably the most interesting part, is that sovereigns are accumulating, and yeah, I mean, some are selling, but I think some are this is their backdoor into their own strategic Bitcoin reserve.
Yeah, they have a pretty holistic digital asset strategy going on at the moment. Back in 2023 Marathon, it was public, the Marathon teamed up with Abu Dhabi's 02 for Middle East, first large-scale immersion Bitcoin-cooled mining, and deployed a decent amount of hash into that. Then there's this, the UAE Sovereign Wealth Fund owns, I think last quarter, it was something around $600 million in Bitcoin ETFs, and they made that $2 billion investment into Binance, which was, I think, their largest investment that they've made at that point. So they're looking at this space very deeply from a bunch of different angles, and I would imagine that they continue to make more investments both into Bitcoin itself as well as all of the companies around it, just as they get more exposure. Because it seems like they at least had a lot of what you see is net new entrants into the space have very poor experiences because they buy the top when everybody's super interested. But these guys started mining back in 2023, made the Binance investment, hold ETFs that are flat to up. And so I would imagine that they have a decent taste in their mouth and only just lean further in here.
Yep, it's super logical. You think about a country like the UAE, or really any Middle Eastern country, or any country with access to natural resources or forms of energy. It makes total sense to start mining Bitcoin if you have effectively a zero cost energy resource. So expect to see more of this. And yeah, keep an eye on hash rate as a really great barometer I've always sort of leaned on in terms of just thinking about sort of non-price indicators for Bitcoin demand, Bitcoin adoption, etc. Hash rate's a great one in the sense that it shows demand for basically building out mining infrastructure and accumulating Bitcoin through mining. And that's just incredibly bullish, because basically the most bullish, some of the most bullish operators in the entire Bitcoin ecosystem are miners. And so it's just a generally positive indicator. And on that chart that we had up previously, you can see, as Michael said, like it's just been ripping over the past few years. There was the China migration, which basically cut hash rate in half. And ever since that point, it's really been on just an upward rip. And I think that is reflective of nation state involvement, because that, like I said, is the logical move if you have access to effectively zero cost energy. Makes a lot of sense to mine Bitcoin.
Yeah, and then it's really important to note too, just because pretty much all Bitcoin adoption is defensive of if somebody else who is a perceived competitor to you seems to be acquiring more Bitcoin and potentially outperforming you in whatever way possible. Many people will look at that and understand that they need to do a somewhat similar strategy. Otherwise, they're going to see their capital flow away. And so I would imagine that many other, perceived competitive countries are taking a close look at what exactly they're doing and how they're benefiting from it, as well as starting to think about how they can implement a somewhat similar strategy themselves.
Yep. Well said. More global news, Mike. This one is you as well. India leads global crypto adoption. APAC emerges as the fastest growing market, according to Chainalysis.
Yeah, I thought this was interesting because I didn't expect that. I think the common consensus has been India is very antagonistic to the space. Obviously, India is a big gold country. But yeah, I didn't go deep here, but this was according to the Chainalysis report. I think it ties into the UAE conversation in that sovereigns are slowly recognizing your pro crypto, your pro digital asset, pro Bitcoin stance really is going to matter. It's going to matter from, are you storing a hard asset on your balance sheet? To Liam's point, are you getting the tribal and knowledge from operating there? Because you can only, if you have a first mover, then you're going to be able to efficiently grow that operation ahead of others. And then naturally, you want your constituents and your citizens to be able to preserve and hold their wealth, because that's what they're going to be able to reinvest. And so it makes sense. India and Asia Pacific has generally been pretty antagonistic to Bitcoin outside of like Singapore and maybe even Hong Kong, kind of. So I thought this was just really fascinating to see. The other thing that's interesting is this really ties into just like the Bitcoin thesis on, you hear a lot of noise, the not stuff, and just in general, you want to hear the adversarial nature and the contentious nature of this space, because it means that there's so much economic value to protect that people will figure out solutions. And that's where I've never really held, not that quantum won't ever be a threat, but it's the notion of whether it's forking the UTXO set, changing the algorithm, and just different things that come up. Is there's so much capital, to Brian's point, investors at all different shapes and sizes, from a home miner all the way to a sovereign, are investing their own personal capital, which is material to them, to figure out how to make this thing keep working. And that doesn't really get priced in effectively, where people think that this thing's very fragile and, past results aren't indicative of future returns. It's like, well, no, they kind of are, because all this capital coming in is forward leading into baking into where the market is going. And so I think this is just another piece with a whole section of the world, getting bullish on the underlying asset.
Yeah, that's interesting. I'd be curious, like, it doesn't look like there's a detailed breakdown here, but like, what percentage of this is broader crypto versus Bitcoin? Because to your point, India does appreciate gold. And so it would be logical for them to appreciate digital gold and see the merit and the value of Bitcoin specifically in that context. But I'm not sure on that breakdown. Liam, do you have anything there, or do you want to move on?
No, it's well said.
I mentioned gold. Some more gold news. Tether is going to invest in some gold miners. The real reason I loved this report was that Tether apparently internally calls gold natural Bitcoin, which I just love. And yeah, we've talked about Tether a bunch on the show the past several months, but all the moves they're making are extremely logical. They're going to own gold, they're going to own Bitcoin, they're going to own some land, and they're going to own U.S. Treasuries and just print cash. Any thoughts on this?
Yeah, there was a few things that came out this week. I think one was a little older, where Tether CEO referenced that if a global reset were to occur, it would happen in gold. Which I think this is kind of a different side to the discussion in the beginning of, there's just, when you first come into this space, and even for a while, you really listen to common narratives, and it's really akin to life. Like the more you grow, the more you realize you don't know. And it's very similar to like, okay, you read the Bitcoin standard, you see Bitcoin 21 million, all right, global money. But like the time horizon and the implementation is like where all the money gets made, and it's the where everyone's hands get dirty, and it doesn't get talked about enough how gold was going to play such a vital role, and is playing a vital role when you think of the sovereign accumulation, what we've talked about on the last trade with what's happening in the Shanghai gold markets and some of the trade happening there. And Tether, one of the most sophisticated players in this space, are insanely long gold, to the point that they have their different packs, or their stablecoin that's on gold, stacking gold, and then just being forthright that if any kind of I think that's probably one of the big reasons is you don't know the time horizon for a lot of these things. You just know the direction, and you don't want to get caught off sides. And so reality is, currencies hyperinflate, Bitcoin rips, but the market has so much, inertia in gold, you're going to naturally see that rip, and a lot of like market structure will ultimately be around that first. I think very few people would disagree that, BRICS countries and others are going to set up different currencies backed by gold. Obviously storage, delivery, all of those things are going to come to the forefront over a long enough time horizon. And then people will realize that there's a better way to do this. But it's just something that doesn't get talked about enough. Everyone's focused on tokenizing real world assets and, stable coins. And there's just the real pair for the next, call it 20 to 40 years is going to be gold, BTC, and then whatever USD, chain is going to be ripping.
Hi guys, thanks for listening. I hope you're enjoying the pod. Just wanted to give a quick word from Onramp and Early Riders. You're probably familiar with our venture fund we operate, and we will be having some very exciting meeting of the minds over the next few months in Nashville around a few events happening at the Bitcoin Park, as well as in Dallas around the North American Blockchain Summit. We'll be having one-on-one meetings, private roundtable sessions discussing the status of the market, some of the exciting investments that we haven't publicly announced, as well as other ways for individuals to get more involved with everything we're building across the ecosystem. If you're interested in learning more, you can reach out to us directly. You can book time, or you can just subscribe to our research. We're going to be publishing a lot of these dates, as well as ways to get in touch via the Early Riders newsletter. You can view it at earlyrriders.com. We're always excited to hear from individuals. We have some of the most sophisticated listeners and clients and investors in Early Riders, and I really mean that. We're working on kind of the bleeding edges of this space. And so it usually takes individuals that have had to think deeply and follow the space for a while to kind of pick up what we're putting down. But we love hearing from you folks, and also hearing about ideas or ways to get involved. There's no shortage of really amazing talent out there trying to kind of either take one step out of the traditional space and figure out what their next move is. And we love hearing from individuals like that, because we're working on a lot of things, and it's really our job between the Guild Network, Onramp, and Early Riders, and some of our other portfolio companies to figure out how to help there. So I'd encourage you to reach out. If it's not this week, please keep it in mind as you navigate the space. We'd love to speak with you. All right, have a great rest of your week, and we'll be back with the last trade with a very big guest that we're super excited about. I don't know if Jackson will like that I share it here. So if you want to know, tag him on Twitter, and maybe he'll share it on Twitter. I don't want to steal his thunder. All right, have a great week.
Yeah, it's interesting, and it's something that my own thinking has evolved on this. I think I used to be not fully in the camp, but at least more in the camp of basically some sort of like leapfrog thesis where we do just move to a Bitcoin standard. But I've come around to this notion of, again, the inertia of gold, 1,000+ year history. Like, there's going to be just an interim period where, it's moving back towards neutral reserve assets, and predominantly that, at least in this initial phase, is going to be gold for most central banks, with maybe just a little sliver of Bitcoin here or there, but like, and maybe over time that transitions. But we're talking multiple decades that it would transition more towards Bitcoin actually demonetizing gold to a certain extent. I think we're very long ways away from that. And I think, to your point, Michael, like this is a blind spot, I think, for a lot of Bitcoiners who are still in that camp of like, why would you care about the yellow shiny rock? Like, it's so inferior. We're going to find the asteroid with all the gold on it. Those types of tropes. Like, I do think it is just a little bit misguided with respect to, again, that inertia, that trajectory, this sound money trade that's emerging. It's not just going to be Bitcoin. Like, it is neutral reserve assets, and the one that is far more ingrained and well understood is gold. So there's going to be this interplay for probably a good amount of time, probably multiple decades.
Yeah, unless people know exactly what's going to be the next reserve asset, we probably get a basket of diversified assets in there, meaning gold, probably a little bit of silver, Swiss francs, or whatever the best of the poor fiat currencies are, as well as the dollar and Bitcoin. It's not going to necessarily just going to be a straight Bitcoin standard over the near term, unless there's some sort of summit like there was to get on a dollar standard backed by gold, but like back in the 1940s. It's just not necessarily how it's going to work, unfortunately, despite my wishes.
Yeah, and I think the thing is, it goes further than that. It's like, I don't want to say Bitcoin can't succeed without gold, but it's its friend, because it's very hard. I can't imagine most people will come to Bitcoin being money and 100% allocation without going through gold and understanding how gold is money. Because I can't rationally understand how somebody would say, okay, well, I'm all in to the end state without understanding the story, how the story was formed, to be like, this is the end of the story, right? Like, because gold is money, you have to understand where sound money fit into the kind of like past 100 to 1,000 years. And so gold doing what it does is not only important for older generations and individuals that understand it, it's also key to like the market structure and how you will build out the most simple framing is you can't print more gold. It's called alchemy. Like, it's never been done before. They talk about it, and it's the same thing as quantum. People will say, oh, you can like make it in a lab, but it's not economically viable. In the same way that counterparty risk is important with gold, where it sits, and people will recognize that, and all the different like constructs of like where gold failed. And so I think that's important, because everything else not only has these inferior qualities to it as far as kind of the supply, but then ultimately people will start to wake up to everything outside of gold and BTC, but even gold and Bitcoin from a price perspective are derivatives of how much money is injected into the system. So everyone's trading around S&P, bonds, private equity, private credit, land, everything else, but the wrong base currency is either gold or Bitcoin, because both of them have outperformed every other asset. And once individuals start recognizing that, they'll get to see everything we talked about in the beginning of the show and in general portfolio construction as inferior, because none of it stacks up. But that's the whole, like, that's basically the gap where we have for the next X number of years is most people still look at gold and Bitcoin as investments versus savings. And it's not until the mental mindset shifts, and I think it will happen sooner than we believe, at least from a savings perspective, because inflation will continue to persist. It's structural, that it has to only accelerate. And so that also ties into the blind spot. The blind spot's not necessarily important for an individual if they just want to stack a bunch of Bitcoin and go about their life, unless maybe something crazy happens, you want a little bit in gold. But I think it matters if you're building or if you want to talk about where we're going. Like, it's very hard to be taken seriously if you can't recognize that gold will play a very serious position, in the same way that we won't get to where we're going, where everyone holding a plastic device with their money on it. Like, these are just like tropes that were built into people that didn't fully understand kind of like how the world works and how finance works. And I'm bullish, like, this next cycle, people just recognizing that it's not that one is, superior. It's not that one's superior to the other. It's just that people have different preferences, and there's different types of market structure that require different things. And yeah, because the alternative has been like the crypto people leading the way, and they don't understand anything with gold and Bitcoin. And that's also not a viable path.
I mean, the other flavor of this transition in my mind is like, moving from being perceived as a hedge and moving towards like becoming a core allocation. So like historically, gold in TradFi circles was, with some exceptions, obviously, but like by and large, my prior firm didn't have any gold exposure. And if you did, it was a very small amount, and it was perceived as this like hedge, like almost this doomer hedge, that if the world blows up, you want to have a little bit of gold. And I think people perceive Bitcoin in a similar light as a hedge. I think the real transition over the next decade or so is, as inflation persists and more people recognize it for what it really is, as the fiscal situation continues to deteriorate, the shift is going to be or that transition is really going to be people moving away from like, oh, this is just a nice little hedge in the portfolio, to like, no, this is just sound money, and you want that to be the bedrock of your portfolio, at least 40%, like something along those lines. And so that's like the real sort of monetary order shift that's playing out at a higher level is like, well, what is money? How do you actually save, to your point, Michael? And like how should you conceive, a well-rounded quote unquote portfolio? It shouldn't just have 1% in this hedge. It should be predominantly in that as the core of it.
Yeah, and I think that it's while I think that may happen, I think it's more likely that the founders and operators of the businesses just understand that Bitcoin or gold is actually the unit of account that they should be chasing rather than more dollars. And like a Figma, just start allocating a part of their treasury and savings into that harder asset rather than people just moving completely away from stocks and going totally into the gold and Bitcoin. I just see that as slightly a more realistic path, but I could be wrong there.
Yeah, no, that's fair.
Maybe they happen together as well.
Yeah. Mike, any other thoughts on that? Or I did want to go to that Gwart tweet that you had shared about AI.
Yeah, let's do it.
So I had seen this original headline from Vlad and like literally laughed out loud at it. But basically, this is a tweet in response to that headline from Robinhood CEO Vlad Tenev says investing for a living could replace labor in a post-AI world. And the quote tweet says, "This is extremely bizarre. There is some weird illogical belief that once, in parentheses, if AI can perform the vast majority of jobs, all of a sudden the only place real humans will have an edge is in financial markets. Does that sound rational? Like AI will be a better plumber and Uber driver and brain surgeon than any human, but you'll be able to invest better than AI. That will be your new job. You're an investor now. You just sit around and invest in shit all day." It goes on, but you get the gist. Michael, what were your thoughts on this?
I mean, I just thought like it doesn't. Obviously, I don't think anybody listening or us surprises from Vlad and the notion of investing for a living could replace labor in a post-AI world, because of course you could just create value from nothing. I think that the core notion is it's really just this understanding of all the faulty assumptions based on everything that's being delivered to us, whether it's the tempo stuff or what we've been talking about, the traditional markets, that it's just crept so much into the amount of inorganic capital, the cost of capital, but the amount of monetary units has been directly correlated to effectively clown world. And I think it goes back to where I have the problem with taking like the Fed speak and all the things we know. Like if you just close your eyes, they have to print more, you should be long hard assets. It's this notion of all this other stuff is noise surrounded based on the underlying fundamentals are completely broken. And this is just a symptom of it right here. And this is like what they're preparing for. And it's where the proliferation of gambling, and it's not a coincidence that the poly markets and the Kalshis of the world, and now that's the hot VC trade, was in the prediction markets. And then there's the perpetual futures, which is the new innovation. It's just more gambling, more spend. And it's just really keep that lens when you look at all this stuff, because there is signal, there is opportunity, but it's not from fortune and it's not from the Robinhood CEO.
Yeah, this was pretty like bleak dystopian outlook. Like if you truly believe what Vlad is saying here, like that, well, it doesn't make any sense on its face, but like if it were to be true, like that's super dystopian, a very sad environment if like everyone's just in their pods, on their Robinhood app, degen trading, like this nihilist future of like, but like it's completely illogical in that it would like replace labor. Like I don't even know what he means by that.
There's a theme that we've been discussing a bunch or before, and it tied into what you were sharing about gold. And it's the notion of it never sat right for 15 years. The market wouldn't talk about or reconcile that Bitcoin was the best performing asset. In the same way that for the past X number of years, anybody with a brain has known bonds have been negative yielding and underperforming. but nobody talks about either one. And it kind of stems from, there is a function, a substrate of culture, the zeitgeist that shapes these things. And my base case was when sovereigns, because sovereigns are really dictating a lot of this and what they do. And so when you see them stacking gold and the gold price move out of the bands that it's been kind of held in for decades, that would be the canary in the coal mine of the showing that the emperor has no clothes, and sort of speak that Bitcoin gold hard assets are the thing. Like, it'll take time. But point being is, these narratives with AI and trade, and AI is another example why I'm bringing this up, because the amount of capital spent on AI and data centers has been incredible.
Yes. No, I know what you're getting at.
I had a podcast guest.
we got a new guest on the show. Liam, did you have any thoughts on?
But anyway, that was the basic premise. Sorry, was the AI stuff. Like, AI is another example of, I think everyone's talking about how it was like this nice vacuum in 21 as the market and interest rates crept up for people, or 22. For people, there was all these pockets that needed to move around, get marked up, because when you think about portfolios and the amount of markups and valuations these companies have had, and I think there's no shortage of jokes with OpenAI and the amount of money they raise, and they don't even know to like reconcile and forecast the amount of depreciating losses they have, whether it's in the data centers they investing in, and then what you've seen what like DeepSeek and others are going to naturally do. I don't even think it's common consensus that these type of large LLMs will be the long-standing winner when it comes to like AI. But nobody talks about it. They're just like, oh, it's cool. We're doing hundreds of billions of dollars in investment. But I think the market understands like that's going to be destroyed capital. And whose money is that? Nobody talks about it the same way nobody talks about negative yielding bonds yet fully, in gold and Bitcoin being the trades of the future.
Yeah, I think this is kind of related. But have you guys seen this chart of OpenAI ChatGPT usage, and basically just showing as right when schools and college ended, like usage just dropped off the cliff? Like it's sort of aligned with what you're saying. Like, there's all this spend, but what is the real value being created? I think that's still very up in the air. If the vast majority of usage for ChatGPT is just people using it for school and writing papers, like that doesn't seem like super value add. It actually seems like value destructive if like people aren't learning and they're just using the tools. Like, that's the primary use case is homework. Like, that's not great.
Yeah, it's just sad because, I mean, a lot of the things that we've talked about today are just value destructive, whether it's trading perpetual futures or the Kalshis, or, options trading on Robinhood, etc. But those right now are where a lot of the capital is going, rather than just ignoring just this sound money thesis that we know is going on at the same time, but it's just not necessarily where all the capital is chasing right now.
Yeah. Well said. All right, boys. Might be a good place to wrap. Any final thoughts?
No, outside of next week, we'll all be in Nashville. So if anybody's listening, wants to get together, we'll be meeting with clients, investors face to face, and then having a few events. So shoot us a note, reach out. The Tuesday to Saturday, there's a bunch of things going on. Bitcoin Park's throwing a summit, and then there's an Imagine If conference they're throwing with ARK. We will all be there. I actually have a random amount of Onramp hats from Bitcoin 2024 that are really nice.
Retro Onramp hats.
So if anybody's around, shoot us a note. We'll save a hat for you. I think I have like 20 or 30. So yeah.
Alrighty. Thanks, gentlemen. See you next week.
Guys.
Thanks, guys.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.